Start.
Okay, Assalamualaikum warahmatullahi wabarakatuh and good evening.
Waalaikumsalam.
Hello everybody.
Good evening.
Oh,
Hi, Doctor.
Okay, so we have we wait a couple of minutes. I think there are already 8 participants. We have Visna, we have Apati, Shatish, Judy, Ayu, Faiz, Yoshui. Is it Martin? I can't see your face.
no.
No.
No. I'm Zio.
Zio, yes. Because
Yeah.
it's a bit dark there. Okay. So everybody are okay?
Yes.
Yes.
Doctor.
Yeah.
Okay. We are fine.
Right. So Zul, are you working, Zul?
Aku dah baru start, tapi saya dah settle case. Saya dah settle kerja, so boleh join.
Okay. Right. So we have 10 people now. So hopefully we will have like a full quorum. Probably before we begin, okay, I will make a few announcements. So we have Ray already inside, Azinuddin. Who else? Hazrul. Hazrul is not here, right? Nazrul or Hazrul?
Azrul.
Hazrul.
Assalamualaikum, Prof.
Waalaikumsalam warahmatullahi wabarakatuh.
Sehat bro.
Bagus, Alhamdulillah.
Handsome bro.
Lepas terawih
Walaupun terawih kat.
Assalamualaikum Prof.
Waalaikumsalam warahmatullahi wabarakatuh.
Kaifa haluka?
Alhamdulillah, ana bi khair. Okay.
Alhamdulillah, Masya Allah.
Okay, we wait for Martin. So we have Martin already. So we have 14. Who's missing? I think Hazrul or Nazrul, is it? The rest? The PhD student. Okay, never mind. Probably he will be joining later. Okay. First of all, thank you very much for everyone to be here, and let me just try. Okay. Right. Before we go into our discussion, I'm planning not to have like an lecture. It depends. Try to see whether is it feasible to have a lecture online like this, or we have an offline lecture where I record the lecture and upload it in Putra Blast or share it in YouTube link, and whichever possible. I'm not really sure yet, because last Tuesday when I had my undergraduate class, there are 62 students, only 43 managed to log in, and the rest are somewhere missing along the line. So, and it's quite challenging. I think other universities also are
Yes.
struggling to try to adapt with this online. I believe my children are already get used to it.
Advance.
Almost every morning they have classes, and now it's
That's
our turn.
true. Yeah.
Where do we stop? Actually, we did stop by assignment or activity 1, right? Everybody, I think I already received 4 activity uploaded, right? And I will probably respond directly to the groups through Putra Blast. I think I can do that, and I give my feedbacks in the Putra Blast. Okay, and the intention today, since the connection is quite good, everybody can see, everybody can hear loudly, right?
Yes.
Okay. My plan is to probably try to go through the slides that I shared earlier in Putra Blast. Let me just try to open the slide. Okay, can you guys see the slides?
Yeah.
You can see the slide.
Yes?
Oh, yes. Yes.
Okay.
Clear.
Right. Let's try to arrange. I need to get to use with all these buttons. Okay. Right. Okay. I hope everybody already have this somewhere in your laptop, or you have downloaded. It's already in the Putra Blast, and
Already.
it is about. Is it okay? Everybody are comfortable?
Yeah. Fine.
Yes.
Better. Proceed. We are very excited now.
Okay. Just to let you know, I think whether I start recording or not, I'm not sure.
I think it is recording.
Okay, it is recording, eh? Okay, because if someone if it is disconnected, and everybody keep quiet, so I don't know whether I'm talking alone or you are still there. Okay, never mind. Later on, I will try to compress this particular discussion, recording, and upload it in whether Putra Blast can accept more than 25 megabyte or not, I don't know. If not, I will try to give a link so that you can download it somewhere.
Yeah.
With regard to this, we will look into the business analysis, where tonight we are going to go through the profitability analysis. So what we call it as the cost volume profit analysis, or CVP. And basically, the CVP are being used before a project or business being conducted. And later we'll go through the what does it mean, what does the reason behind it, and the key assumptions of the CVP, what are the basic equation involved, and basically how to plot the graph, and eventually you are going to do some sensitivity analysis with regards to the CVP. And at the end of this particular topic, you should be able to do another activity, which is basically plotting the CVP graph for your particular project. All right. So, and also doing a few scenario of sensitivity analysis. All right. At the end of the session, okay, so you should be able to do some description on what is profitability analysis all about. You should also be able to explain the assumptions. In order for us to do the CVP analysis, you must put assumptions. Everything relies on the assumptions, right? If you put a more realistic assumption, you may end up to get a more realistic cost volume profit graph. Okay, and then of course you should also be able to use the equations on the CVP analysis, and finally be able to plot the graph and perform sensitivity analysis. Okay, at any time, if you have question, you can stop me at any time. I don't know whether you have gone through the slide or not before this. If yes, it's good. If not, it's okay. We are going to go through it now. So as I highlighted earlier just now about the business analysis, it is an important part of the commercialization process, where it is applicable to all commercialization paths. Remember, we already gone through 3 commercialization paths, and it can be used in any one of the paths. And business analysis also known as the CVP, also known as a financial projection. So you may know what are the estimate total sales. You can also project what are the profits that you can gain later on. You can also put aside in terms of the cost, the cost of your process for manufacturing, for other things, and also be able to see whether there is a break even or you are in loss in terms of your operation costing. So when we look into the first item in terms of the profitability analysis alone, okay, as I highlighted, it is the CVP, the cost volume profit analysis, and it is actually involve 3 main things. The first one is about the relationship between the revenue. The revenue, basically the amount of a sum of money or the dollar or the ringgit that comes into your company account, right? And then you should be able, the second element is the cost, right? The total cost, okay, we will look into the breakdown later on, and then the profit. Those are the three relationship between the 3 important items, and it requires understanding of the selling price. So this basically, by doing CVP, you need to be able to break down all the costs involved in order for you to determine the selling price per unit, as well as selling price per bulk, maybe a carton, maybe a dozen, or whatever item that you are trying to sell. And of course, also it also relates to the behavior of the activity of the cost driver, and it widely used in the economic evaluation of existing or proposed product or services. So this particular CVP can be used in doing the evaluation of an existing product or new product that you want to carry out, right? And then typically it being carried out before decisions are being finalized in terms of the operating budget for future period. So by doing CVP, a company would be able to make a vital decision. How many people you need to be employed? How many hours of working for your workers? And how many raw material that you need to buy in order for you to produce certain amount of product to achieve certain profit. Okay, so at the same time, the CVP analysis is a traditional approach of profitability analysis, right? So whenever you do business, the first aim, of course, you want to make sure you are doing, you are going to gain profit, right? Is because company normally is it is a when it is a business oriented, it is a profit driven. Okay, not like some NGOs, non-governmental organization. It is a not for profit. Okay, they are making profit, but they are not for profit companies or entities. So it is a technique used to examine the relationship among the total volume of an independent variable, the total cost, total revenue, and profit for a time period. Okay, when we say time period, meaning that it can be quarter, it can be also a year. Normally, it is for a year. It is for a year period. Right. The analysis, the CVP analysis, volume will refer to a single unit level, meaning that you have to look into what is the total cost of producing one single unit, right? Or what we call it as an activity cost driver, such as the unit sales, and you can determine how much to produce a product and how much is the sales value, the cost. When you want to make sales, how many ringgit are you going to sell? So that is assumed to correlate with changes in revenue, the cost, as well as the profit. So all of the costs are accounted for CVP analysis, such as production costs, marketing costs, and administrative costs. We will look into the examples later on. So this analysis is useful in the early stages of planning. Okay, why is it? Because it will provide an easy framework for discussing planning issues and organizing relevant data, right? So the CVP analysis is widely used by for-profit as well as not-for-profit organization, as I highlighted earlier. So it is equally applicable to the service firm, merchandising firm, and as well as manufacturing firms, because if you are service oriented company, you need to be able to understand the breakdown in terms of how many people you need to have on standby in a certain period in order for you to provide your service, and the cost would be different when you are running merchandising or you are running manufacturing firms. Okay, right. Before we go any further, right, the CVP analysis will answer the following question, right? This is kind of like the benefits of doing CVP, right? So by doing CVP, you will know how operating and marketing decisions affect the profit, right? And you will definitely know the relationship between the variable cost as well as the fixed cost. We have costs which can be varied. You can also have costs that are fixed monthly, all right? And you will know the relationship between the unit selling price as well as the sales volume, right? And how do changes in sales volume affect costs as well as the profit, right? And also, the CVP analysis is implemented to set the price of a product. So what does it mean is that you will, the way you set a price of a product, for example, like you want to sell your pointer, laser pointer, is it 10 ringgit, is it 100 ringgit, or is it similar price with the competitors? By doing the CVP, it's not just simply look at what are the competitors' price, and you can decide whether to introduce the product into the market now, or you can decide to launch it later. Okay, it all depends on the CVP analysis, and more importantly is that you can determine the break-even point, right? Where break-even point, I think most of us know the term here, the break-even, meaning that you are not running at loss, you are not making profit. Okay, you are just break-even. Whatever revenue that you gain, basically you are going to pay for your cost. And at the same time, CVP analysis can also be used to perform strategic what if analysis. What if means that what happened if this, for example, like now we are in the movement control order condition where we cannot go and sell our product. We cannot put up our stall to sell nasi lemak. Okay, so we have to find ways. What happen if this is happening? So that is what we call a sensitivity analysis. So later, all of you in your company, you're going to provide the scenario in terms of the sensitivity analysis. So you have to imagine, you have to come out with, for example, like if you increase your volume by 5%, by 10%, what happened to your fixed cost? What happened to your variable cost? What happened going to be your profit margin and so on? All right. So going further, CVP analysis is a subject it is subject to a number of assumptions. So what are the assumptions? So these assumptions do not negate the usefulness of CVP models, especially for a single product or service. So they do not suggest the need for further analysis before plans are finalized. So these are the number of important assumptions being summarized here. Okay. So in terms of the cost, we make assumptions, we make guesstimate. So we guess and estimate the fixed and variable costs. We also look into the linear total cost function. We look into the linear total revenue function. We look into the single product or constant sales mix for multiple products. So sometimes you have only one product in your company. Most of the time, a company have more than one product. It can be a product with different series, okay? For example, you are selling cars, you are selling Honda Civic. It is not just one Honda Civic. It has a Honda Civic Type R, Honda Civic, the normal Honda Civic, and so on, and also hybrid Honda Civic. So you have to take into account on that as well. And one activity cost driver, sales volume. So these are the key elements of assumptions that you have to make in order to get the suitable or realistic cost profit volume graph later on. All right. So in terms of the classification of cost.
Can I ask a question?
Yes, please.
Can you go back to the previous slide?
The previous slide. Let me just. This one or before that?
Yeah. This one, the chart. Okay. I just want to seek your clarifications for linear total cost function and linear revenue function. How it looks like? I mean, what do you mean by linear, and what happens if non-linear?
Okay. This one we will look into much more clearer when we go through the example. Okay, when we plot the chart later on. So basically, when just to give a short answer there, right? Linear total cost function. Basically, you will be able to calculate the total cost. Okay, in term of the linear. Linear means that it is not. It varies in a linear manner. So let's say, for example, like for this year, the cost is 100 ringgit to produce one unit. Next year, it is if you want to produce 2 units, it is 200 ringgit. If you want to produce 3 units, it is 300 ringgit. So it is linear. Okay. Similarly with the linear total revenue function. So later when we look at the example, I will be able to explain much more clearly there. Okay.
It means proportionate and constant all the time.
Yes.
Okay. Okay. All right. Okay.
Okay. Right.
Prof.
Yes.
Want to ask something? Like, do we need to use like all of the thing there from the chart? I mean, like,
you mean these assumptions? Yes. These are the 5 main element assumption. When you want to do, when you want to start.
All.
Yes.
Oh, okay.
For example, like if you only have one product or you have multiple products. So you have to decide, yes, I only have one product for the moment. So that is your assumption. Okay. Or for example, like you cost, fixed and variable costs. So what are the fixed costs? What are the variable costs? You have to make assumption in the beginning. This happen before you start doing anything, right? Or you have an existing product, you want to re-look on the profit for this year. Okay, you already have it in 2019. Now in 2020, you want to revise. What are the profit margin? Whether your profit margin this year is 20% or you want to increase to 25%. So whenever you want to decide the profit margin, right, you need to re-look at the variable cost as well as the fixed cost. Which one need to be reduced? So in terms of what I'm trying to say is that all of the assumptions need to be made. Okay, is it okay, Ray?
All right. Okay, not the problem.
Yeah. Okay, and then the classification of cost as fixed or variable cost with unit level activity cost driver. So all costs are classified as fixed or variable. Okay, everybody understand fixed and variable. Fixed means it doesn't change. Variable means it depends on other factors. So we will see the example later on. Okay, with unit level activity cost driver. So these assumptions is most reasonable when analyzing the profitability of a specific event, right? For example, like you are running a concert or you are running a big convocation event, so you need to know the costs. You need to know whether you need to rent the hall. You need to how much is it fixed rate? Is it depend on the utilization of the electricity? So everything need to be detailed out. The profitability of an organization that produces a single product or service on a continuous basis. So it will affect a lot in terms of the breakdown. The fixed costs are costs that do not change in total with changes in sales volume. No matter how much volume are you going to produce. For example, you are going to produce 12 per month, or you're going to produce 24 units per month, it will not change. That is what we call as a fixed cost, right? So if it is, it varies, meaning that it is a variable cost. Okay, let us go to an example here. Let's assume a paper company called Benchmark Paper Company that the only product is high quality photocopy paper that is manufactured and sells to wholesale distributor at $8 per carton. So that is the unit price per carton. So applying inventory minimization technique, the Benchmark Paper Company does not maintain inventory. So it does not keep the inventory of raw materials or finished goods. So what do? Basically, they will purchase raw materials directly. Okay, so they don't keep like a store. Whenever they want to produce paper, they will purchase raw material. Okay, and then what happened when they finish or they complete the product, they will just load it to lorries or transportation for shipment. Okay, so this just that is assumption. Yes.
What you mentioned just now, can I say it's like a JIT, just in time process? Because the company doesn't keep the inventory.
Okay, the meeting will end in 10 minutes. Zoom already make okay, never mind. We will
Prof,
when it finish, we will try to upload a new session. Is it okay?
Yes.
Okay,
no
in less than 10 minutes, everybody will be logged out, including me. I will call again another session immediately. Is it okay?
Okay.
Alright.
Right. Okay. So just now, is it Azinuddin talking? Example like JNT, right?
JIT, just in time.
Just in time. Yes,
Yeah.
meaning that the company itself does not keep the stock in terms of when they want to produce something. For example, like um, the same concept of just in time, where you don't keep the raw material, because if you keep raw material, even though you don't use it, meaning that you have to have storage, you need to have a specific place to keep it, some inventory system and so on. So it will incur costs. And in this particular example, this company does not do that. So okay, and then the benchmark variable and fixed costs follow, where the direct material variable cost. So this refer to the cost of the primary raw materials which converted into the finished goods. Since the consumption of the raw material increases as the quantity of the goods produced increases, the direct material represent a variable cost. Okay, so because imagine the raw material to make papers, it depends on the current market price. If the market price increases, so the cost to produce the paper will increase as well, right? The raw material also consists primarily of paper purchased in large rolls. So benchmark company, they buy large rolls of paper. Paper comes not in like already been cut. It is in a ream or in a large quantities. So the company also treats the cost of purchasing, receiving, and inspecting raw material as cost of direct material. So they total it back inside there, where they calculate the cost of the direct material, okay, to be $1 per carton of finished product. Okay, so of course there's a lot of things that probably in your case you are not able to do, right? But I would like you to do your very best, right? For example, like to give a good estimate of the direct material cost. Right? Sometimes you buy off the shelf. Okay, if that is the case, it's much easier where you can easily know what is the off the shelf readily made product. Okay, so if you want to do it properly, there are so many items falls under one item, which is direct materials. Okay, and then about the labor. Okay, so this refer to the salaries or wages earned by production employees for the time they spend working on the conversion of the raw material into finished goods. And based on the benchmark manufacturing procedure, direct labor represent a variable cost. Okay, since it's not fixed monthly salary, right? So it depends on how many hours or how many people that you require to be working in order for you to produce certain volume. So the cost per for the direct labor is calculated as 25 cents per carton. All right. So this is depending on the volume as well as the hours and days the workers need to do, right? And then another variable cost here, the manufacturing overhead. Okay, it refers to cost for operating the business, and it is also known as operating expenditure, right? And utility bills, an example. Okay, the electricity bill, the water bills, telephone, and maybe internet considered as variable manufacturing overhead. Okay, you can also include like lubricant for cutting and packaging machine, electricity to operate machine, cost to move material, and so on. Okay, and this cost is equal to $1.25 per carton, right? So you can see that everything is being calculated to per carton, because earlier we already put the per carton sales, right? And then variable selling and administrative costs. So of course, in order for you to do the business, you have the marketing people, you also have the office people, right? So costs that are not directly associated with the manufacturing, it is on the office side, right? So this include commission for sales, transportation of finished good to the wholesale distributor, and the cost of processing the receipt and disbursement of cash. So it is calculated or assumed to be 50 cents per carton, right? And then fixed costs. What are the fixed costs? Manufacturing overhead fixed costs. In this case, the cost to convert all the raw material, insurance of the building, fixed salary of the supervisor. Supervisor normally you don't have overtime, right? So you have like a fixed salary, fixed portion of the electricity, all in cost is $5,000 per month, and fixed cost for administrative costs. So this is other than those directly associated with the raw material. For example, like your own salary, the CEO salary, the staff from accounting, marketing department, the permanent staff costs, and depreciation, property tax, insurance facilities, and so on. Everything is about $10,000. Okay, so if you put in a table, you will see clearly here one column of variable cost per carton and fixed cost per month. So one is directly to the manufacturing and the other one to the admin. Okay, so okay, let me just see here. It's already ended 10 minutes ago. Okay, kept showing this. Okay, someone already been logged out. Okay, probably I'll call again. I stop here now. Okay, I initiate another session. All right,
Okay.
so that we can finish this particular course. Okay, I'll see you soon,
Okay.
inshallah.